Nick here at the BeachConnection office. We are here today with Richard Bischoff with Guild Mortgage. He's going to answer some questions and give us some advice on how to help you get better service with your mortgages, help you purchase your dream home, and what you need to know ahead of time. So let's just dive right in. All right, here, one of the things all our buyers look for when they're out there is to get a mortgage on a loan. And in that, there's the steps to get it ahead of time and even before you make your offer. And one of the things we run into a lot of times is the difference between pre-qualification and pre-approval. Can you help us out with that a little bit there, Richard?
Yeah, absolutely. So a lot of times when you are starting out with the mortgage process, you want to know what you even qualify for. Because the last thing you want to do is shop around for homes that are not in your price range. And so with the pre-qualification, that just allows us to look at your your financial situation, your income, your debts, and to have a rough idea of what you can afford, and that will give your real estate agent an idea of what to help you look for. Now the pre-approval goes a step further than the pre-qualification, and we actually get to pull your credit, and we can really analyze from your credit score and your debt to income and your assets what you can get approved up to. So if we can get someone the pre-approval, they can go confidently forward shopping for a home, and when they make an offer, it's going to let the seller be pretty confident in that offer.
And once they take the step to get that pre-approval and all, is there any, I know along the process there's a lot of going back and forth between you and the client to get information, but what documents can they get you on the front end that can help the process along and move quicker so that you can give them a quicker pre-approval or a quicker approval to get even that matter?
Yeah, so if you're going out and you're already starting to look at homes, you want to look at homes, go ahead and gather these few documents. You're going to want your last 2 years tax returns and W-2s, if you're self-employed, your 1099s, and also your business tax returns. You're also going to want to get us your most recent pay stubs, a month's worth of them. So if you get paid twice a month, we need 2 pay stubs. If you get paid 4 times a month, we need 4 pay stubs. And then we also would like to see your asset statement. So checking account, bank statements, savings account, retirement account, money market account, stuff like that for the last month or two, so we can really have a good look at your financial situation.
Okay. Now, in the process, what have you noticed that a lot of people miss when they're trying to get you all those documents?
The biggest problem we run into is not getting all the pages. When we send it to the underwriters and it says page 1 through 10, we need pages 1 through 10. Even if there's blank pages in between, we need all pages. A lot of times we'll see people, they'll just send the first page or the first, third, fifth, seventh because it's front and back and they didn't copy front and back. So the biggest thing that we need is them to send all pages of all documents.
Okay. And I know as a real estate agent, when I'm dealing with the clients, I know when you've done the pre-qual, even started the pre-approval and maybe even gotten the pre-approval, obviously you've already pulled their credit. Once we get over that hurdle, usually the next hurdle we as real estate agents and our clients here is debt to income ratio.
Yes.
And that's a big thing. So can you explain a little bit about that, and then what are ways that a client can take to make sure their debt to income ratio is going to be in line to help them get their mortgage?
Absolutely. So in general, the debt to income ratio is going to be around 45%. Now, each loan program allows a different debt to income. For example, with FHA, we've had people go up to 60% debt to income. Now, that's not normal, but we have had people go up to 60%. So really, what we need to do is get an application filled out, see what loan programs you qualify for, and then let you know what the debt to income can be. So first-time home buyers, if they have a decent credit score and they're doing FHA for a low down payment, then they can have a little bit higher debt to income. But in general, they like to see it below 50% and typically around that 45% debt to income.
Okay. And so going through this whole process, obviously we trust Richard and want Richard to handle our pre-quals, our pre-approvals, and ultimately closing the loans for us. But why don't you tell our clients a little bit of the loans that you guys are right in your wheelhouse, that you specialize in, you can get done, timely, handled?
Absolutely. Well, let's start with what we don't do, just because there's very little we don't do. In Myrtle Beach, though, we have what's called condotels, hotels on the Grand Strand. We don't loan in them. There's some banks that do that, but we don't do the condotels, and we don't do pre-construction, and we don't do land loans, like lot loans. We do everything else, and we do everything else well. We finish on time. We close on time every time. But we specialize in the VA, FHA, USDA loans. And any Fannie Mae, Freddie Mac, conventional loans, and we also specialize in jumbo loans. So loans that are obviously over $424,000.
Okay. And is that where the limit is today?
Yes.
424? Okay.
Yeah.
I learned something today as well. So, all right. Well, I think that's all. And like I said, our clients, we appreciate you if you contact Richard with any questions and to get the process started, because we want to get these deals closed on time, and we like to work with people that are good.
Thank you.